Hi there, everybody. This is Trader FX 711. The time now is 6:57 a.m. on Wednesday, the 4th of March 2009. We're looking to take a potential trade coming up here at the end of this hourly bar. Just to date stamp this. If we put this cross here on that hourly bar there, you see that over on the left-hand side here of the chart, it's the 4th of March 2009 at 6 o'clock in the morning. So this particular hourly bar, alright, will finish in 2 more minutes, and it will finish, it'll be the beginning of the 7 o'clock session, and we'll be looking at taking a trade. What we're looking at here, that I think that we can see here on the right hand side of the chart here, this is the live situation, is that I think we can see a potential buy trade set itself up here. I'm looking to buy the euro US dollar pair. We're waiting for a couple of minutes before this hourly bar finishes. One of the things I see here is that we've got an up bar, right? The close is higher than the previous close. We've got a higher low, a higher high, right? And we've got this volume here, which is on the high volume. It's lower than these last 4 hour previous volumes, but what you want to notice here is that this volume here compared to this volume, all right, back here, all right, you notice on this volume, this was the hourly bar here, and after that hourly bar, price rallied. All right, that's still in high volume. It's not in the low volume zone. So we've got high volume here on this hourly bar, come off this low, right? And so I think that's why we want to be in a buy position first. We're going to wait until this turns over, and then we're going to be looking at taking a buy here. Okay. Let me just get that ready. I'll click on here. Here is the euro. Alright, go back to the chart. Just put it here. Okay, so at the end of this hourly bar here, which is going to tick over very soon, we're going to look at taking a buy on the close. Alright, if we look at the close of that bar, right, on the left hand side of the chart, the close is 125.69. So that's where we want to take our buy, right at this point now, 125.69, up here, right. There is my spread coming in right there at 125.72, so that's what I'm going to take the buy. So let me submit this trade. I'm going to trade one lot. Oops, it just moved off. Wait for it to come back. Alright, 120, there we go. We're going to take the trade right there. Okay, 125.72. And okay, my limit is going to be 20 points away from there. 125.92. Let me just get that into trade point. Then we'll go back and fill the other details. Okay, if you look down here, we are now in trade, right? 125.72. Okay, that's where we want to be in the market. There's a 3-point spread. There's a 125.69, 125.72, so 3-point spread. All right, let's go back to before we go to the charts. We go to the spreadsheet. Okay, on the spreadsheet here, this is the 8th trade we're doing. Okay, it's the 4th of March, 09. Okay, it's 7 a.m. Okay, the balance here is 1130.76. If we want to do a 2% return, we're trying to look at making $22.60. We're going to probably do just slightly under that. There is a sell. We've got the sell at 120. Sorry, we're looking at buying it, aren't we? Not selling it. We'll buy the euro at 125.72. Okay, we're looking at a 20-point gain, which is target we're looking at is 125.92. The lot value is $1.13, but we're going to do a $1 value on the euro. We're going to trade one lot because that's how much it is. So every lot is $1, right? So number of pips times the lot value, because it's $20. Alright, I'm going to copy this formula here down. Right, that's our balance that we're looking for. Right, and let's see how much margin was required for that trade. If we go back to our trade station here, the margin was $125.70. Okay, that's how much it cost us. $125.70. And the percentage that we're looking at on this trade is going to be 1.7%. Right, that's how much we make if we get to that projected balance there. All right. Okay, so let's just go back to the charts. All right, if we have a look at the charts here, you can see one of the reasons, or the reasons that we brought it. All right, we've got an up bar. Let's just review this. Right, we've got an up bar, higher high, higher low, higher close, and we've got high volume here. Right, if it was low volume, you'd see the volume bar significantly below that line, or even below that particular line there. Right, but we've got higher volume, so I think we're going to see this price go higher. The other thing I want you to notice too is that we've got our low point, right? See that low there, right? That's support, and that's a good support area because if I go backwards here, if I go back, you will see that that area there, right, that low corresponds with this low here. Okay? Down at that low, right, the market came down, right, got into that zone and rallied away. Okay, so I think we're finding support here. It's like what we call a double bottom. Alright. We've also got support in this area here as well. Okay. And that extends back into this zone as well. So we've got good support down in this low area. So that's why I think we're going to see the price rally. And we've got good volume, alright, solid volume on an up bar with the right hand edge. Alright, so let's put our parameters in here. Alright, we're going to have a profit target of, excuse me, 125.92. Right, that's where our profit target is. Right, our price gets to there, we make our 1.7% return. Where's our stop going to be? Well, we're going to place our stop outside the random noise, right outside the range. Now, where's the range? Okay, at the bottom is back here, right, from that low. Now, if I click on here, and that bar, the lower that bar is 25.12, I'm going to put it 5 points lower than that at 25.7. Right, that's where my stop is going to be, right, beneath that low, 125.07. Okay. Alright, so let's go ahead and do that. Go to our chart here, place our stop in. I'm going to talk about stops also a bit later on when I do some more trades, but there's a real important issue we're going to talk about here. Alright, we're going to replace that order. We're going to replace it, yes we do. Place the stop at 25.7. Right, here our stop is outside the range, real important. And our limit is inside the range. That's important. It's important to do as well. Okay, so let's just go back to our charts. Alright, so all we need to do now at this point in time is just have to sit and wait. Alright, we've got our actually let me just put the stop in. Stop line 25.07. Alright, I'll just wind this here. There's our stop line right here. Okay, at 25.07 point. Okay, our stop is beneath there. Let me just take okay. I think I took that line off, but we can put it back on. 25.07. Okay, so there is my stop line there. Okay, way outside the range. Okay, so let's just sit back and see what happens over the next few periods. There's our target. We've got our limit in, we've got our stop, protected on the trade, and all we need to do now is just sit back and see what happens and how this trade plays. Okay? Alright, we'll catch you guys on the other side. Alright, and I'll come back to you. Until then, take care and enjoy the profits. Bye for now.